everybody. Welcome to the Moving Markets Podcast. It is Monday, July the 28th, 2025. U.S. stock market has been closed for about 20 minutes at the time I'm recording this. And, even though it was only by a little teeny tiny bit, the S&P 500 once again finished at a new all-time high for the day, hit a new intraday high, backed off of that. And even being up just 1.13 points, 2/100%. I mean, it barely registers as positive movement. And most days we would say it was a very, very flat market. And would say that today, very flat market. But any finish to the upside on the S&P right now is a new all-time high until there's a day where they finish lower. I mean, they have just been, the S&P 500 has just been on an incredible run. I believe 6 days in a row of movement to the upside. And so 6 times in a row, a new all-time high finish. So incredible bullish market. One of the rare times that you see the S&P 500 well into overbought territory. And that should give a little bit of pause as far as being overly bullish going into the next couple of weeks. I don't think there's a reason to suddenly get defensive and to suddenly get really bearish on the market. But I think the indexes need to flatten out a little bit, or even just pull back a tiny bit. It doesn't have to be a lot, just a little bit of a pullback. Call it maybe a mini correction, just something that will bring it out of that overbought territory. This is without a doubt what we refer to as a melt up in the absence of real dramatic, big sort of, earth shaking activity or events. The market just continues to move up. Now, I got to be a little bit careful as I say that, because I don't want to downplay the significance of trade deals that are getting done. Maybe possibly moving closer to peace in some war-torn areas in the country. Sometimes you feel like moving closer, other times you feel like not. But there's been good things going on, including the the EU deal that got discussed and at least verbally agreed to over the weekend. These are big things, so I don't want to downplay them, but you haven't had like the dramatic effect of a new war breaking out, or you haven't had an escalation in a trade war of dramatic proportion. No longer, I think, do the markets look at an announcement about new tariffs or increased tariffs as a doomsday scenario, because what's happening is that these are simply not playing out to be that doomsday thing. I think the world at large and the markets have figured out that when Donald Trump talks about new tariffs or increased tariffs, it is a negotiating tool. Doesn't mean he won't follow through, but it is a negotiating tool. And so far, you cannot argue, even if you detest the man, even if you absolutely hate the Republican Party and hate conservatives and hate everything they stand for, if you're just being intellectually honest, you cannot deny the fact that he is winning right now in terms of trade deals, negotiations, getting people to come to the table and have more meaningful negotiations. It is working the way he told us it would work and the way we should want it to work. And even if you can't stand the president and his party, I would hope you still root for America's success if this is your country that you're living in. I know we've got international members, and some of what's going on may not seem as fair to the other side, but I think if you take an honest look at it historically, you'll see that the United States has been treated very unfairly, and we've allowed ourselves to be taken advantage of in trade agreements and tariffs that have gone, the other direction. And so I really truly see this as a leveling of the playing field, and I believe it's working. And so, this is a melt up. in the absence of one big giant thing that is a catalyst, but at the same time, there are some really good things happening. Now, when we talk about catalysts, let's talk really quickly about the new trade that we sent out. We did a long iron condor on the QQQ Invesco Trust Index. We didn't go we didn't get real crazy. We went 570, 575 on the call side. We went 565, 560 on the put side. We don't need a huge move to the upside or a huge move to the downside. And we went out to August 15th on the expiration date so that we are giving ourselves a couple of weeks. The reason for giving ourselves that couple of weeks is because I think you may have a flattening of the market, but I also think it will move above 575 or down below 560 within the next couple of weeks. I would love it if for 1 week we pulled back a little bit. We could maybe exit the put side of this new trade with some profit or close to it, and then see things reverse and maybe exit the call side a week or two later. This trade that we just opened up, or that you will open up for tomorrow, it's a little bit longer term than some of the long iron condors that we do, not by a huge amount, but a little bit longer term, just because I do think you could go into a short period of a little bit of back and forth. I could be wrong. The markets could continue to move up. One thing that would absolutely skyrocket the markets and get us profitable in this trade is if the Fed shocks the world and gives us a rate cut on Wednesday. I don't think that will happen. The betting market is completely, I think, convinced that that is not going to happen. I believe it's 90. I'll check right now, but I believe it's 99% that there will not be a rate cut. Oh, 96.9%. That I'll be honest with you. I haven't looked at this for a couple of days. That 3.1% that says there might be a rate cut, that's double or triple what I thought that would be. I thought that might be 1%. It's 3.1%. I am a little bit surprised by that. I know the president is trying to put a lot of pressure on Jerome Powell to do a rate cut. I do think there are members of the Fed committee. I think there are Fed govs who are on Trump's side and think we should cut rates, and think that how it would spur the economy, and the savings that we would get on interest and on loan rates and so forth. I think there are people that believe it would not be inflationary, or that the effect on inflation would be small enough that it would not, shake things or move the needle. I do worry about the inflation creeping its head back up. That's one of the only areas that Donald Trump is upside down in right now in polling, is that people that were so upset about the economy and how bad things got under Joe Biden are not feeling the relief. They might, statistics are being reported that show that the economy is doing good, that inflation has kind of leveled off. It's not necessarily getting worse. We've had some months that have been down just a tiny tick. We've had some months that have been up just a tiny tick. But inflation seems to be in check. But there's legitimate, valid worry that it could rear its head again and pop back up. And we don't want that to happen. And so as much as I understand the benefit of a rate cut to how much interest we pay on national debt, and what a relief that would be for that, as much as I would like to see there be a greater affordability for housing, it could potentially affect the rent market in a positive way, for renters. I don't know that I believe it would be appropriate to do a rate cut right now. But it's not my field of expertise, and so I kind of I'm in kind of a wait and see mode. It's like if I were included in this survey, or however they come up with these numbers, however they determine who's this 96% and who's this 3.1%, I would be like in this. If there was a category right here that was undecided, I would be like, I don't know. I would say that the chances are very low for a rate cut right now. So maybe in that sense, I'd be in the 96%. But if I had to explain why I think there should be a rate cut or should not be a rate cut, I would be in that category of people that says I could make an argument for either side, and I don't know ultimately what the right thing is to do or what the timing should be. Now, there are a lot of people who believe that when we get to the September meeting, you can see it's not a complete reversal, but it's about 63% that are saying rate cut. And then when we get to October, I believe and I don't think we're going to go all the way down to here, but this becomes closer to 80%. In fact, I think it is at 80% when you add all of that up that believe rates will be lower in one of these next two meetings. But the odds of it for this coming one on Wednesday, very, very slim. However, with all that said, um, the Q trade is set up largely with the rate decision on Wednesday, and more than the decision, because I think this 96.9% is going to end up being accurate. More important than the decision to not offer a rate cut, I think is going to be what the Fed says. If they give some optimism that a rate cut is coming in one of the next couple of Fed meetings, I think you'll see the markets take another leg up. I think this melt up will continue. If and this is the direction I'm leaning a little bit. If Jerome Powell talks very negative about the possibility of rate cuts, if he continues to lie about the effect of tariffs like he did about transitory inflation, because I do believe that's what he's doing. All of the evidence is that the tariffs are not creating additional inflation. And I just want to smack people on the side of the head that are saying, well, we don't know yet. We don't know yet. Well, 6 months ago, you seemed to know without hesitation, you seemed to know that the tariffs were going to doom the economy, and you didn't say it's too early to tell or we don't know yet. And so I think for the people that are saying, well, yeah, it didn't kill the economy, but we don't know yet, it still could. What a hypocritical approach to take. Um, yeah, anything could happen, but I think we've seen evidence, and we saw it, 8 years ago, and 7 years ago, and 6 years ago when Trump was in his first term, that these tariffs and these trade talks and using the tariffs as a point of leverage for better talks, it did not sink the economy. It did not cause inflation. And I think there is ample evidence to suggest that that will be the likely path that we continue on, that it will not cause inflationary pressure. There are other things that could cause inflationary pressure, and higher tariffs with some really, really big trading partners could contribute to it. But by itself, I don't think you could blame any inflation on the tariffs, at least not based on what we've seen so far and the evidence we've had so far. So that's where we find ourselves on a Monday going through the rest of this week. Big week with a lot of earnings this week. You got Microsoft, you've got Meta, you've got Amazon, you've got Apple, all reporting this week. There's a lot of other companies that are reporting, Boeing, Ford, some of the ones on the smaller companies that we try and take advantage of, like Etsy. We sent out a triple play trade on Etsy this morning, sent one out on Microsoft. There were a whole bunch that I wanted to do today, but we've got a couple of trades on the triple play side of things that are causing us some grief. MicroStrategy reports on Thursday after the bell. We either have to be out of that position, and I was so optimistic. I don't know, for those of you that are following MicroStrategy, this was so difficult to watch today. They started very nicely to the upside. It really looked like it was going to be the turning point, and that it wouldn't take much at all to get back up to 420. In fact, the high point that they reached today, I believe, came up just short. They got up to 417.01. They were a few dollars off of 420 today. And it looked like, wow, what an easy reach they'll have in the next couple of days. And then gradually throughout the day, they gave up everything, had a little bit of rally, and then it just all collapsed with about 30 minutes left to trade in the market. They started out really high, gradually gave it up, little bit of a rally right there, And then 30 minutes left in the market, it just all imploded and they went into the negative. That was, like I said, that was really, really hard to watch because it looked so good early on for MicroStrategy. I do think there'll still time for this trade to come back and to bounce back up to 420. I think it could happen. But if it does not happen tomorrow and Wednesday, then on Thursday morning, we will do one of two things. We will exit the trade wherever we're at, or if we don't do that, we will add long puts to the trade to get through the earnings report and hopefully do that without incurring too much of an expense towards the trade. So that's the plan for Thursday morning if we don't see a chance to get out of that. Tesla, we made an adjustment this morning. Hopefully you saw that on Discord. And then Google, also kind of hard to watch because Google, uh, in spite of everything they reported and how good their movement was early on the day following their earnings report, they have done nothing but give it up since then. They had that, you can see here on this chart, they had that phenomenal open following their earnings, gave up most of that, managed to have a little bit of an up day on Friday, and then today they spent a fraction right at the open in positive territory and then sold off. Came up quite a bit from their worst spot of the day. Google, I might be willing to roll it out one more week because we rolled out the first time for such a small amount of money relative to the trade. Rolling it out one more week might not be a bad thing because I suspect that today is more a function of coming out of overbought territory technically than anything else. I think that's the only thing that is keeping Google from jumping right up to 197.50 or higher is just that overbought technical indicator, which spooks some people. So we're going to give that another day, maybe two, before we adjust. But we will adjust MicroStrategy unless they go back up over 420 before the end of this week. And then Tesla, I think we made the one adjustment today. We might, if Tesla continues moving to the upside over the next couple of trading days, we'll take what is now a $2.50 spread on a bull call. We'll roll it out a week and increase the spread a little bit and give ourselves a chance to make more on it, on what's open on it, if it breaks through that resistance at, we'll call it 335 or so. So we might end up adjusting this one again. We'll see how it plays out. No adjustments to collar trades. We're set to go through earnings with everything we have open on the collar trade side of things. Ford this week, Palantir and CoreWeave, I believe both in the early part of next week. Snap, I think, is this week, or is it early next? I'm forgetting now. SoFi tomorrow. Snap is next week. We'll get the report on Snap next week, but we get Ford, Palantir, SoFi, and Snap all within about a week to a week and a half of today. So it'll be a busy week and a half or so for earnings, but everything is pretty much set to run through earnings the way we have them positioned right now. So I'm going to wrap up right there. I'll be back on to record something close to the close of the market tomorrow. In the meantime, have a great day. Bye-bye.